Um, Hope you guys are all having, and ladies, are having an absolute wonderful day. See some familiar faces. So this is about consumer adoption, and I think one thing I wanted to start with, just as a high-level introduction, is obviously the fact that everyone's familiar with the Gartner hype cycle, right? And that is where crypto, we truly believe, is no longer in that hype cycle area, but we're very much going through the flippening of the old system versus the new system. And so that's where I'm really excited to be joined here today by these esteemed gentlemen to talk about the next wave of consumer adoption. So to kick this off, I'd love to each of you to give a very quick introduction of yourselves, and also a fun fact, because we like fun facts, right?
Hello everyone, my name is Thomas. I've been working in Visa for 15 years now and 25 years in payments after a private equity experience. My fun fact is that I'm a Bitcoin miner since 2011, so I'm very old in this ecosystem.
That's undercover.
Yeah, almost undercover. And my job today is business development, meaning I'm in charge of all the new stuff for Visa, so all across the board for France, Belgium, and Luxembourg, including crypto, obviously.
Marc?
Hi everyone, I'm Marc Vangherberle and I'm Chief Strategy and Marketing Officer of Algorand Foundation. And you probably know Algorand. Algorand is a layer 1 blockchain known for its elegant consensus mechanism that helps developers really build applications with real world use at scale. Fun fact, I've always been kind of a geek, so this is going to be weird. I've always been kind of a geek, and so people in the room probably know the number pi. But what you probably don't know is pi up to like 25 digits, which I can tell you.
Does it, out of interest, does anyone else know pi to 25 digits or more? That's a no. Okay, you definitely won.
That helps if you're in crypto. Hi everybody, my name is Oliver Stauber. I run a huge crypto exchange in Europe called KuCoin EU, only in Europe, running for license here with our headquarters in Vienna, and hopefully we'll receive the license soon. I will give more a laugh fact than a fun fact. I'm a father of a 6-year-old boy and just 9-month-old baby girl.
Nice. Congratulations. So, yeah, my fun fact is I have a spoon collection. That's that one, to get that out of the way.
Also weird.
You won.
So to kind of kick things off, I think when thinking about consumer adoption, the first thing that came to my mind was the importance of crypto cards. And so I think looking back a little bit, I'd be interested in hearing your thoughts of, have actually crypto cards been an unlock for consumer adoption? And I'm also especially interested in kind of the EU versus global argument there in terms of, has it been more used in the EU? We can start with Visa, but interested to hear your thoughts.
Yeah, of course. So I think I would say yes. Okay, so we've been issuing crypto cards in 2015. We began the journey with Coinbase in 2015. So I would say yes, and for many reasons. I would say that first, this is a habit. People in the commerce are using cards, and being able to off-ramp the crypto portfolio is a nice way of making a use of those cryptos. And as well, new players, neobanks, they love the plastic. Even if it's in the telephone today, they love having the plastic because this is the only object that you can touch, apart from your wallets and obviously your cryptos, because the cryptos are digital. So I would say yes.
Okay, I'll be controversial and say no. So I love the crypto cards. I love them. I think they're, as you say, they're great kind of off-ramp vehicles if you want to off-ramp your crypto into fiat. But Visa cards and MasterCards work pretty well in the normal world, right? In the Web 2 world. So why would you set up a crypto account in order to get a Visa crypto card? Doesn't make any sense, right? Because you have your Visa card already, right, that you use in a Web 2 environment. You don't need a Web 3 wallet. There's no benefit of getting a Web 3 wallet in order to get a Visa crypto card, right? So I think it's a great solution for people that have crypto holdings and that want to have an easy way to spend their crypto holdings. But I don't think it will attract new users to crypto.
Yeah, that's fair.
So I need to disagree. I, I can underline this with a couple of facts. Only this year, from January to October, with our crypto card, KuCoin, we had an increase of 65% in cards issuing, and more than 480% in increase of payments and usage of the cards, with a very famous provider here on stage. And I believe not only for the payout but for the pay-in, it's helping adoption for 100% sure. Is it the end of the road? Most probably not. I'm with you. There will come new solutions. For example, we also have something in place that's called QPay, so that you can have direct payments in crypto with your merchant, and you don't need a card in between anymore. And it's more or less, in my point of view, only a way to get there. But as long as we have so many merchants accepting cards, still I believe this is a very good product for our users.
Yeah, thanks for sharing and also disagreeing with each other. We want more fighting on these panels, So that's where ultimately, as a user, I can go to a centralized exchange and where you become my custodian. But that is where a lot of people that have been in crypto for a very long time believe in very much like being your own bank. And so I think that's where, do you really believe that new users that are coming in and the next generation of users that are coming in are really going to be being their own bank, or are simply rebanking from the old system into the new system, but using very similar players like a centralized entity, very much like a bank in a way? Like, what do you think the future is going to hold in that regard?
So I think it's a very interesting question. I think it is true that, for instance, if you look at stablecoin volumes right now, right, like the reality of the matter is that kind of most stablecoin volumes are handled on centralized exchanges. They're not really, operating in DeFi. They're operating in centralized exchanges. So it's a very valid question, and I think ultimately, we believe in the original crypto ethos, right? Of not your keys, not your coin. The reality of the matter is that most people really don't want to have to deal with the risk of controlling your own money, unless there is a much easier way for people to do so. And I think this is the challenge that we have currently, is that, backing up, nobody's good at backing up keys. Nobody's good at backing up passwords either. And so unless there is a solution for that problem, I think it's going to be very hard to kind of onboard like the next billion users. And that's a significant problem that has to be solved. And so there's attempts to do that, right? Like there's, for instance, the DREC Alliance, and Algorand is part of the DREC Alliance. And the whole idea behind DREC is decentralized recovery. It's the idea that you don't have to back up your private keys. You can share portions of your private key with your friends, and then through an automatic cryptographic mechanism, those keys can be reconstituted automatically without any kind of intervention from the user in case you lose your keys. So you'll need stuff like that to really provide confidence to users that they can actually own their own keys and be their own bank.
Yeah, I also think that's the future, so to say. But until we get there, it's our job, for example, to do everything possible when it comes to security. People trust their assets with us. So also with KuCoin, for example, we really give everything on security. We even have all the certificates, ISO and SOC 2 and whatnot. So banking grade security, so that the user can be sure that their assets are safe with us. However, I'm an OG like you as well, and I also believe in not your keys, not your coin. So maybe at the end of the day, there will be a mix still. And also new solutions, for 100% sure, will arrive to make it easier to have your own, security and wallets to use in an everyday business. Yeah.
I would love personally that all the people could be owning their own keys, and their own coins. Obviously, this is why it has been managed from the beginning, But if we want to be realistic today, what we need is banks that just provide the access to crypto custody, which is not the case as of today. So that's, I would say, maybe the first stage of the rocket. And then afterwards, if everyone knows about crypto and wants to manage its own personal keys and cryptos, they should do it, and make DeFi on their own.
Maybe to add on that, I think this is already seen on the near horizon, so to say, that also the TradeFis, the banks, the credit institutions will more and more offer custody for their customers as well, and also have the one or the other crypto offering in partnership with maybe the one or the other exchange. But we have such an example in Austria, for example, where a huge bank is having a partnership with a huge fintech, and this works very, very well. However, the interesting thing here is that the bank said, okay, we didn't expect that we do not get too much new customers because they were thinking they get a lot of Gen Z new customers because of this offering. However, they said they managed to keep a lot of their existing customers so that they did not get out to Revolut or any of the other banks that are already offering crypto. So it was more or less a retention program at the end of the day.
But these are all rebanking use cases, right?
Definitely, yeah.
So no fight on this one.
Yeah, well, I think that's where, and the next question I was going into was in terms of what are the type, like in terms of, I guess, the ease of use of using a centralized exchange. For example, if I want to get yield on my asset in a centralized exchange, it's probably one button that I have to click. Whereas in DeFi, I have all of these options of all the things that I can do. Do you guys have any thoughts on kind of that problem area around the usability?
Well, I think usability is a gigantic problem. And I think this industry is just terrible at designing user-first interfaces. And I come from Google. Like I worked 10 years at Google. I was the CMO of Android. And so at Google, the whole idea of user-first is so deeply ingrained into the culture of everything that we do. And you don't see this at all in crypto. In crypto, I think it's very much kind of a deep tech engineering culture. And so as a result of that, you basically see interfaces that appeal to engineers and not interfaces that appeal to regular users. And even if you look at like the biggest DeFi protocols and you look at the UI of these protocols, also on Algorand, like we're not, special in that regard. We have equally bad UIs. They're terrible. They're terrible everywhere. And so they don't have to be, right? I think there's no reason for these UIs to be terrible. I think people just need to spend more time designing them properly and designing them with a user-first mindset. And this is a really big issue that I think the industry has to solve. And so we're really focused on this. So for instance, we announced in our roadmap that we're launching a new self-custody wallet that we call Rocka, and that has been completely redesigned from the ground up to be Web2 centric. So it includes this DREC, for instance, for recovery. It will completely hide the native currency. So it'll use fee abstraction. So you can actually transfer USDC without owning algos, for instance, in your account. And so it'll do a bunch of this stuff to kind of reimagine what a crypto wallet should look like, and a crypto wallet that's really designed for a Web2 user base.
And how do you see that at KuCoin, given that you're kind of guiding people down one path?
Absolutely. I need to disagree again a little bit. So we also try for sure very hard to get the best user experience possible in crypto. We just recently relaunched our app and web app to really focus also on that part, on usability, even also for the more, how can I say, complex products, because for sure on a platform like ours, it's not only buy, wholesale crypto. You have the structured products, you have the derivatives, perps, whatnot. So, but also here we try to much more guide our users and also give much more security, and in the future even much more education also, to train our customers that they know what they are doing when they are going up with futures, so that if something happens like last Friday, not everyone gets knocked out immediately at first hand. So yes, especially when it comes to Web3 wallets, for example, so for DeFi wallets, there's a lot of work to do. We already have a very nice one. However, we are not supposed to publish it currently in Europe due to regulations for sure. So we need to do our homework here as well as soon as we have our licenses in place. But I can assure you that here is a lot of attention from our developers as well. And we really try to listen to the market and the users to then be integrated in our platform at the end to give a great user experience at all.
See, but you talk about education, right? It's like when Steve Jobs launched his iPhone, nobody needed education, you know. So, and I think this is the
True that.
right. And I think this is like when the first iPhone was launched, it was actually maybe this sounds negative, but it's not. It was a packaging exercise, right? It was because none of the technology was new. Like all of it existed, but the brilliance is the packaging. The brilliance is like how do you put together a product, and that creates a phenomenal user experience. And part of this is also what features do you kill, right? Like that, the iPhone was really good because it basically did a bunch. It didn't do a bunch of stuff. It basically focused on the core value proposition, and it killed a bunch of features that were not relevant to the core value proposition. And we, with an engineering mindset, you try to put as much features as you can into the product, which makes it really, really difficult and really hard. And so I think this industry needs a iPhone moment. Somebody is going to figure out how to put the pieces together in such a way that is going to be awesome.
Yeah, I like your analogy, but today Apple strives as well with the iPhone because they already were able, to make tens of or hundreds of thousands of millions of devices, already. So they put marketing money on top of that. I agree. It was to educate. It was easy, but they teach the use cases. They taught about the internet communication device. Remember it's an iPod. It's an iPod with a phone app. So to me again, adoption UX is paramount of sure, but I'm sure that is going to need, and this is why the DeFi products can't do that because you need marketing money to explain that. Sure.
Maybe one add on to this as topic. I just arrived from Dubai from another huge conference and tech conference, and the interesting part there was everyone is talking about AI, and AI I think could really change the game here, could be that game changer that you are talking about. Everyone has his own avatar going to deal for him on our platforms. It's even possible already now. We tried it with a huge large language model, and if this is going to be implemented into our systems, this is going to change completely. You just maybe have to say, I want to have that kind of yield with these products, with that risk appetite, and everything else will be done by your avatar, for example. Just as an idea, but this is going to be huge in the future.
Coming soon to an AI near you.
Yeah.
Which and
maybe not in the EU though, due to the AI Act.
This discussion around the roles of centralized versus decentralized architecture in a way is like, how do you see the topic of consumer protection from your points of view? Because that's where ultimately with platforms like Pump.Fun, anybody can buy anything and can be rug pulled or whatever, lose their life savings potentially. And how do you see the roles, and I think as organizations, especially in regulated environments now, particularly here in the EU. And I think this question's more focused on to Marc and Oliver.
So I think there's two answers to that. One is if you think about how do you create like compliance services, and so to me, and there's friction, of course, between kind of compliance and then having privacy. Right? And so to me, the way you deal with this is that you have like the right type of architecture where at the base layer, you have a network that can execute transactions fast with instant finality in like a completely decentralized way. Then on top of that, you provide kind of compliance at the asset level. So for instance, assets on Algorand by default can be enabled for freezing, for clawback. So all of the things that you'd expect in a compliant architecture are actually built into our protocol and are implemented at the asset level. So that's the second level. And then how do you ensure that you still have privacy? Well, you of course, many of the transactions need KYC, right? KYC is happening off-chain, obviously, but you can actually do zero-knowledge proofs on-chain so that you can maintain the privacy architecture that you've defined while still being completely compliant and making sure you complete all the KYCs and everything that's associated with that. So that's kind of like the first thing I would say. Then on the payment side, of course, when you think about merchants and chargebacks and stuff like that, I think obviously if you look at the payment ecosystem, and of course, 10,000 times more than I do on this. If you look at payment ecosystem, it's basically a system of exceptions, right? It's like the network that has existed for 50 or 60 years running on IBM mainframes with COBOL programs. is basically a system of exceptions. What happens if something goes wrong? If everything goes right, you don't need a complex system. You just do the transaction and you're done. It's basically how you deal with all the exceptions and the exceptions on top of the exceptions and all that. And that is, I think, a very complex system to potentially disrupt. At some point, I think it will have to be disrupted because people are going to run out. Companies are going to run out of COBOL engineers. I don't think many COBOL engineers are graduating from universities anymore. There's actually
you have AI now.
Yeah. Right, probably. Yeah. So there's actually this company called COBOL Cowboys. Have you heard of that? COBOL Cowboys? And they get hired by enterprises. They're kind of retired COBOL engineers, and they get hired by enterprises to go and help them fix their little COBOL programs. So I think that'll be a while before that, I think, gets disrupted.
As soon as you scale, you need complex systems, in payments. It's not complex by design. It's complex just because of the scale and the fraud. We just launched several months ago an agentic, protocol with an MCP, that you can call. And we just said as well, because it's almost a new backdoor, because you can fake new merchants. So this is why with this one, we just announced last week that we can be able just to partner to certify all the merchants, because now we're going to have to certify all the merchants, or else it's going to be a super mess. So this is why we design complex systems, not just for the sake of it, because we need it.
Maybe this is also true for all these rules and regulations that we need to face on to have this consumer protection in place that at least the governments want us to have. It doesn't matter if it's MiCA, if it's DORA, if it's MiFID, if it's e-money. Most of them focus not only on anti-money laundering and sanction stuff, but mostly on the protection of the customer. Being a qualified lawyer myself, for sure, I must admit that this mostly is needed also. However, I also have a second answer to that topic. I mean, especially also when it comes to DeFi, BampFun, and what you were talking about before, we need to think of how to stop babysitting our customers. We cannot think about the last possible scam in the world. There are so many, they are growing and growing and growing, and you cannot regulate everything at the end of the day. The customers need also to be educated and take serious decisions them on, and not do all their life savings on BampFun and or on a 125x leverage trade and are bankrupt afterwards, and then running to us and saying, hey guys, you didn't protect me before myself. So this needs to be, because if we really tried to do that on a regulatory perspective, we would not be able to do business anymore. Business is risk at the end of the day, and this also our customers need to understand.
Yeah, that's fair. It's a topic of also about freedom at the end of the day.
Absolutely.
And I think you really touched on privacy, and I think that's where, out of interest, who in the room knows about the travel rule? I know you know about the travel rule, that's for sure. So that side of the room doesn't really know about it, but almost every transaction you make these days anyway has your KYC details passed alongside it, right? Which brings me to the last question I have, which is really on the topic of the next wave of consumer adoption, which is, what do you think is next and is up and coming or is necessary? You guys are free to go in any direction you want with this, but really for onboarding every single consumer on the planet, what is necessary for us to get there?
Very short answer: account abstraction and AI. So agentic, of course.
I agree with that. I think that in addition, I think the real true promise of crypto will or should be that your money always works for you 24/7 while you sleep. You basically put money in your account, it starts generating yield automatically, it keeps generating yields until you do a transaction, and then it starts generating yields on the other side. And so this idea that you have to have a checking account that, where you're subsidizing banks to provide loans to businesses is just not right? I mean, if you talk to any millennial, you talk to and you explain to them that your checking account is actually subsidizing a bank to provide a loan to a business. They look at you and it's like, what? Right? So your money should always work for you, and crypto has the promise of yield-bearing stablecoins and other mechanisms to actually have your money always work for you, and that to me is a real promise.
Yeah, that sounds great to me. I also go in the same direction, but I frame it a little bit different. So I already said this week on another panel that by 2030, crypto is dead. But
2030?
yeah, but it's going to be the basis for a new way of doing finance, of doing banking, of doing payments. So it's going to be the ground layer. It will not be called crypto anymore. It will just be the future of finance. And we are all building of it. You are building that. You are building that as well. You are part of it as well. And it will just be normal to do your transactions, your payments, your savings, your yield farming, whatnot, on chain. And this is a bright future, in my opinion. In a secure way. What?
No.
We didn't fight.
No, you didn't fight. You didn't fight. We have like 1 more minute left, and so I'm wondering if you guys have a question or an argument to one of each other, maybe, or something random, or if someone wants to put their hand up and they have a question, then we can take a random question. Just shout it. Yeah, I'll repeat it. I'll repeat it.
Do you hear me? Okay, so my question is for you, Thomas. You said crypto cards are not really interesting for people who do not have a crypto wallet at the moment. But regular crypto cards do not really have a lot of benefits as crypto credit cards do, like cashback, free Spotify, airport lounge access, etc. Might that not be a reason
I'm not sure
to
I
get
said
into
that.
crypto?
Crypto cards are for everyone, people with wallets on DeFi or not, or centralized exchanges or banks, or you can build anything what you want, any layers, any. So I'm not sure I said that, but yes, issuers can add benefits on their own, meaning it can be any coin, it can be any benefits, just like kind of a ref share, so points or anything you can think of, But ultimately, you have a business model to I would say to respect. For instance, in Europe, which is a very highly regulated market, especially on cards, debit and credit cards do interchange money. So the money out of the pocket for the issuers is regulated. So it's only 20 and 30 basis points. So meaning that you have to give benefits on top of that, which is not much. So this is why it's pretty difficult to add some of those benefits, which is easier for exchanges to do that. So I will let my partner to talk about that if you want.
Yes. Happy to do so, but there is a reason why we offer this kind of products, because it just works. It's great for our users, for our consumers. They get instant cashback, they get our crypto back more than that, and have a lot of other beneficials. So this is great, but also when it comes to the future of payments, for example, what I was introducing before, with all that stable coins coming up in the future, and even huge credit institutions nowadays think of issuing their own stable coins and stuff like that, because they found out it's much cheaper, it's faster, it's secure. So why don't use it as well? So I much more wonder if what's gonna do Swift, for example, in the future. I know that they already have their developers and their R&D in place as well, and elaborate how they can do that. But could, for example, a stablecoin, even the question is which one, and if there is going to be a standard, and there's a lot of things to think of, but replace Swift at the end of the day. Yeah, and a lot of banks are already using crypto as means of daily settlement within their own banks, for example.
Cool. Thanks for sharing that last fun fact. Please give a round of applause to these panelists. Thank you very much for joining us today.
Thank you.